Good morning, everyone. In today's video lecture, we are going to learn about IFRS 1. Prior to learning IFRS 1, we are expected to know the meaning of IFRS, what are the advantages and disadvantages of adopting IFRS. So, once we have equipped ourselves with the basics of IFRS, it is a lot easier for us to understand and study the various sections of various standards under in the International Financial Reporting Standards. On that note, we will begin with IFRS 1. IFRS 1 sets the tone for all the other IFRS standards that we are going to study because it is in this standard that we're going to understand what an entity is supposed to do if it decides to adopt IFRS over the local accounting standards, or for ease of lecturing and for ease of understanding, we will be using the word gap. All right, so we are referring to local accounting standards. For ease of understanding, we will be taking the example of GAAP. However, in India, our local accounting standards are the regular accounting standards given by ICAI, whereas after the adoption of IFRS, it is IND AS. Let's move into the lecture. So, what is IFRS 1? IFRS 1 talks about first time adoption of IFRS, meaning a company which has been in business for quite some time and has been preparing annual reports and its financial statements in the local GAAP or the local standards that the company is supposed to adhere to. If such a company decides to adopt IFRS for various reasons. So the reason why a company would go and would go for IFRS, we should have already studied prior with regards to advantages of IFRS and what are the benefits that the company receives by adopting IFRS. So once we are clear with that, we also know why a company would adopt IFRS. So any company that adopts IFRS for the first time, it is supposed to explicitly state that it is adopting IFRS for the first time. So, in the annual reports, in the financial statements, a very clear and an evident and an obvious statement should be made that the company has adopted IFRS for the first time. So, in such case, what exactly is the company supposed to do? Now, we all are aware that IFRS means International Financial Reporting Standards. So, IFRS does not just talk about recognition and measurement of different transactions and accounts, but it also gives us a brief overview of how to report these standards. All right. So, the first thing a company is supposed to do is prepare its current year financial statements under IFRS. So any company that is planning to adopt IFRS for the first time, there are three things it's supposed to keep in mind. So the first one is obviously prepare the current year financial statement under IFRS because it's adopting IFRS for the first time. IFRS simply means the company is preparing its financial statements using all the provisions and guidelines given by IFRS. So the current year financial statement needs to be prepared under IFRS. Now, if all of us have had a chance to take a look at any financial statement of any company, be it in India or be it globally, we usually witness two amount columns. One column is the previous year balance, and the second column is the current year balance. So, current year balance, for example, let's take the year ending of a company is 31st of December 2021, which happens to be precisely 4 months from now. So let's say the December 31st is over, and then we are on in the month of January. So 31st December 2021, there's a column and you have all the current year figures, and there's a column right next to it on its left which says 31st December 2020, which happens to be the previous year balance. So all financial statements are prepared in such a way. The reason being is, for us, it is easy to understand and compare how a company has performed in the last one financial year. So only comparing and trying to understand what was the profit on 31st December 2020, what is the current profit that is on 31st December 2021, has the profit increased? Has a profit decreased? If it has decreased, why? It is easy for us to understand, analyze the financial statement, thereby analyzing the company's performance, and then arrive at conclusions for various stakeholders. So, in order to facilitate comparison and understandability, there are two columns in a financial statement. One is your PY balances, and one is your current year balances. So, a company who's adopting financial statement preparation under IFRS is supposed to uh, report all the current year financial statement under IFRS, and in order to facilitate understanding, comparability, and to get your opening balance, the previous year financial statement is also supposed to be restated under IFRS, right? So that's what point number 2 here means. Restate the prior year comparatives under IFRS in order to get the opening balance. Also, besides just getting the opening balance, to facilitate comparison and thereby enhance the use of the financial statement so that all stakeholders can understand and analyze the performance of the company in the previous financial year. Now, the third point that the company is supposed to do is, now the current year balances and profits has all of it has been prepared under IFRS. The previous year profit also has been stated under IFRS. Now, apart from these two, the company is supposed to reconcile the current year profit under IFRS to the profit reported under GAAP. Meaning, now in the current year under IFRS, I have made a profit of $10,000 million. I should also, as a company, try and calculate my profit under GAAP. So this way, I will be able to understand what is the profit that I'm getting when my statements are prepared under GAAP, and what is the profit that I'm getting when my statements are prepared under IFRS. This is just to understand what is the difference of moving, or what is the advantage of moving from local accounting standard or GAAP in our example to IFRS. What could have been the profit and what is the profit now. So I have my profit under IFRS. I'm going to reconcile and figure out what my profit would have been had I followed GAAP that year as well. So that way I will be able to make a thorough comparison and also understand if adopting IFRS over GAAP has actually benefited me or not. So these are the three things that a company which is going for adoption of IFRS for the first time is supposed to do: prepare current year financial statements under IFRS, restate the prior year comparatives under IFRS, and reconcile the current year profit under IFRS to the profit that would have been reported under local GAAP. What could and what now. The next one is, if a company is adopting IFRS for the first time, what are the things that the company should be aware of? So now we already have a brief understanding as to what are the various statements and figures that are supposed to be prepared under IFRS and what is required to be under GAAP, and most importantly, the reason why this is the case. All right. Now let's take an example and figure exactly what happens. What is the process? Okay. So let's take, for example, there's a US company. Year end is 31st December. The company has been following GAAP. Now, the authorities or regulatory bodies have given the company a choice to move to IFRS. Okay. The company has also consulted all of its auditors, law firms, financial advisors, and has decided that moving to IFRS would be of great advantage to the company. And the company has decided to convert to IFRS for the year ended 31st December 2021. So all the five statements which comprise of your financial statements, that is your statement of financial position, comprehensive income, cash flow, disclosures, statement of changes in equity. All of these five different statements have to be prepared under IFRS. To facilitate comparability, the previous year's financial statements also have to be prepared under IFRS. So for a company which is going for 31st December 2020, the reporting date, all five statements are supposed to be prepared under IFRS. But how will I compare it if it's in GAAP? So the last year The financial statement and figure will also be prepared under IFRS. We've learned more about this in the previous slides as to why the previous year statements also have to be done in IFRS. Okay, but it does not end over here. Let's see what happens next. What should be done now, right? So the reporting date for all the 5 statements is 31st December 2021. The comparative statement is 31st December 2021. So all the 5 different statements have to be prepared under IFRS for both 31st December 2021 and 31st December 2020. Now, if you notice your income statement and your financial position, that is your balance sheet, they're both as on date, that is as on 31st December 2021. However, your statement of changes in equity, your statement of cash flow, and disclosures are all for a period of 12 months because, like the name goes, changes in equity means the changes have been happening throughout the 12 months, right? So it's essential for us to record. Whereas your income statement and balance sheet is as on date, as on 31st, what is my balance? So that's not the case with your cash flow. Cash flow is an increase and decrease in the movement of your cash throughout the year. So income statement and balance sheet is as of date. We don't have a problem. We have our comparatives. We have a reporting date. But these things are throughout the year. So what needs to be done? You have to go retrospectively. If 31st December 2020 has to be reported under IFRS, that simply means the opening balance of 1st Jan 2020 also should be IFRS. Hence, 1st Jan 2020 becomes your starting point. And this date is called date of transition. I repeat, the starting point for opening balance, if I need my IFRS statements on 31st December 2020, my starting point is 1st Jan 2020. This is my date of transition and not necessarily 31st December 2021. Okay, moving on. So on the date of transition, which happens to be the starting date of the earliest comparative period. This is a term or a jargon or technical term that we are expected to remember. So they can ask you questions like what is the date of transition or what is the date of earliest comparative period. So here for me, it is 1st of January 2020. That is my earliest comparative period, all right, not 31st December 2021. So this is retrospectively it is happening. That is, we are going back and changing things into IFRS. So once we have sorted all of this, what is that we're supposed to do, right? So first, you have to recognize all assets and liabilities that are allowed under IFRS. For example, derivatives is allowed under IFRS. Secondly, de-recognize all assets and liabilities that are not allowed under IFRS. Your IFRS does not allow deferred revenue expenditure or miscellaneous expenditure. The third one, reclassify all assets and liabilities or and equity as required under IFRS. For example, IFRS says that convertible debentures need to be split into liability portion and equity portion. So there are supposed to be two components and two components need to be shown separately. Then the last one is measure all assets, liabilities, and equity as under IFRS. For example, investments in share of other companies were earlier shown as cost, but now it needs to be shown as fair value. Now, these are all just examples for you to understand what is meant by recognition, derecognition, reclassification, and measurement. About each item, we will be learning in the forthcoming standard. So this standard is just a broad, we are setting the background for the forthcoming standard. So in detail about each item, we will learn in the forthcoming standard. So just as examples, you can take note of it. So this is about moving to IFRS or first time adoption of IFRS. Now moving to IFRS, of course, brings a couple of challenges with it, not necessarily disadvantages, but a couple of challenges. There are, of course, short-term costs that are incurred. Accounting system will change. You have to train your employees. There are changes in accounting policies, but all of this is only for the short term. In the long term, IFRS definitely is of utmost advantages to the company. So what is the process? Required to adopt and apply for IFRS on a retrospective base. That is the key term here. Reporting date is 31st December 2021. Comparable date is 31st December 2020. Starting date is 1st Jan 2021. So apply for all the three on a retrospective basis. Thank you very much. The forthcoming standards will be covered in different other lectures. Thank you, everyone.